Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with a fan favorite, Mr. Dan Bird. How you doing, sir?
I'm doing well. How are you?
I'm doing well. I'm excited for this episode. You and I have been talking for 6 or 9 months or so. I've always thrown out there that I'd start shopping at 3,200, but in order to go shopping at 3,200, I have to get a shopping list. So you're going to do a session for folks on how you generate a potential shopping list, and I'm just going to take copious notes and see what's going on. So,
Yeah,
Dan, the
it's
floor is yours.
I'm going to show you kind of my process, my method.
Yep.
Doesn't mean everybody's going to do it the same way. Everyone will have different ways of
You're not a financial advisor.
I'm not a financial advisor. Yeah, and I won't be able to extensively show how I would put a complete shopping list together. I'm really just going to show how I might identify a few stocks to do research on, and then figure out if it makes sense based on my trading methods and my risk tolerance and things like that, whether I would buy them. Everyone else has to take that into their own consideration.
Do your own research, folks. Do your own research.
Right. But this is just kind of a process that I typically go through.
Awesome.
All right. Let me share first. And this is my newsletter for anyone who is interested in getting this. These are some excerpts from the newsletter. So send me an email to breakpointtrading@gmail.com. And I'll send you this week's newsletter and add you to the list for next week. I actually like to start the session by talking about how we ended the last session, which is this little chart down here on the lower right. This comes from Stock Traders Almanac, and they do extensive historical research on the stock market. What's the market done over 75 years? Mm-hmm. And we've talked before about October being a bear killer. And this is some data that shows that bear market bottoms usually end in October.
Yeah.
By far.
I think that's statistically relevant, as I would say.
Yeah, no kidding. It's not just a little bit. Yeah. It's by far, and it shows you the Dow, the S&P, and the NASDAQ. So this goes back to World War II. NASDAQ's is 71 because that's when it was created. The other two since 1946. So this is, roughly, 50 to 70 years worth of data. Without a doubt, October is when bear markets a lot of times will end. That's when they'll bottom. Nice. Also, the best period of the year is the last couple of days of October, October 28th, through middle of January is the best part of the year. And usually the best part of the year goes till May, depends on what happened. That didn't happen this year, naturally. But the end of the year is usually when a rally will occur. So the market's been going down steadily. It hit 3,500, which is a key support level. Could hit 3,200 still. So you can't discount that, but we're getting very close to a bottom. So since we're getting close to a bottom, I thought I would talk about how I might identify some potential candidates to add to my watch list and do some more research on.
Awesome.
So the first thing that I do is I want to look at all the sectors. So I look at a wide view, top down. First, the indexes. The indexes have been terrible. They've just been going straight down. However, I think they're getting very close to the bottom, very close to hitting that best part of the year rally, the end of the year. So I want to see, what's been strong. You can see utilities actually has been pretty, this goes back 1 month. Utilities and real estate, consumer discretionary, technology, all three of these over the last month have really not been performing very well. Doesn't mean they won't turn around.
Utilities and technology at bottom of the list, usually they're a little more divergent than that.
Yeah, that's right. Usually technology and consumer discretionary are the two most aggressive sectors. Mm-hmm. Utilities and real estate are the two most conservative defensive sectors.
That's just odd. They're usually, yeah.
Yeah, they're both correlated here at the bottom. Now, one thing that could mean is that technology and consumer discretionary will accelerate faster than anything else.
Yeah, it could. Yeah,
that could happen. I mean, they could be so oversold that there's nothing but bargains waiting there. But we don't know. We don't know that. You can't guess. You can't, hope is not a strategy. Mm-hmm. So what I want to do is look at the ones that are the strongest over the last month. Energy, we know that's been strong for quite a while. But healthcare looks like it's starting to creep up here,
Okay.
right?
Mm-hmm.
So healthcare is one that I want to take a look at. So if I look at end of day, this is on Friday, healthcare actually led all of the sectors on Friday. It was still down slightly, but it led everything else on Friday. So let's take a look at healthcare and see how it's doing versus the S&P. So this is my relative strength chart. I'm a big fan of relative strength, not just looking at the actual numbers or actual prices, but how are they doing compared to other things? So how is healthcare doing compared to the S&P? And you can see right here, ever since the beginning of September, it's actually been outperforming the S&P.
Got it.
So if this is going up, this is healthcare versus the S&P. If this is going up, that means healthcare is outperforming the S&P. Now, on a real basis, it's been declining. This is the accumulation distribution line.
Right.
So even though it's been declining, it's still been outperforming the rest of the market. And the rest of the market's been going down, right? So you would expect that it's declining just like everything else has. But healthcare is outperforming it. So this looks like a good sector to take a look at. Let's look at the industries inside of that sector. Okay. So the way that I've designed this is stockcharts.com, by the way. I put a lot of work into this, but the way that I've designed it, I've taken all of the different sectors, the high level sectors. So here's consumer discretionary, XLY. Here's communications. Here's healthcare. Here's consumer staples right here, XLP. I put these all together, I group them, and then I put the individual industries that are inside of each of those sectors here together. So healthcare is all grouped together by their individual industries. You see that?
Mm-hmm. Yeah,
we got 1, 2, 3, 4, 5 industry groups inside of healthcare.
Got it.
I'll start with the first one and see how they're doing on a relative basis. This is medical equipment. How is medical equipment doing versus the S&P? So it's starting to climb. The black line in the background is the S&P. You can see the S&P is going down, but medical equipment is outperforming the S&P. All right, the next one is biotech. Biotech is definitely outperforming.
Yeah, racing. Yep.
Yeah, that's racing higher. So biotech looks like it's a really good one. Healthcare providers looks really good too. And they had a big spike on Friday, even though the rest of the market went down. Yep. So healthcare providers did pretty well. The next one is medical supplies. They're okay. It's kind of going sideways, I'd say. And pharmaceuticals. Pharmaceuticals looks really good as well. Okay. So the three inside of healthcare: biotech, healthcare providers, and pharmaceuticals. Okay. Those are the three that look like the best industry groups.
I'm with you.
I a lot of times will look at biotech, but I'm not going to do this for this exercise. Okay. Because biotech is very volatile.
Yeah.
So you have to be, it depends on your risk tolerance. You have to be prepared for big swings in biotech stocks, especially if they're coming up for FDA approval and things like that. So the second best one was the healthcare providers. Okay. So I want to take a look at the stocks inside of healthcare providers. I like All right. So what I did was I created a scan that allows me to look at all of these are all of the sectors, but I put slashes, so that means it's going to ignore this. This is, by the way, this is stock charts. It's the way that you can scan all of the stocks in the stock charts universe to narrow it down or filter it down to the ones that you want to see. Okay. So I'm looking for stocks that have lots of liquidity. So we want volume of more than 250,000 shares a day. Okay. I'm looking for stocks that are more than $5 a share. So I don't want penny stocks. Right. And I'm looking for a scooter score. This is a stock charts metric that identifies relative strength. So there's a number of things built into this that allows you to very quickly identify relative strength. So what this means, the way to read this is that these are in the top 70% of all of the stocks.
Got it.
Okay. So that's what I'm searching for. And then the group is healthcare providers. I want to see which ones in the healthcare providers group meet these criteria.
All right.
Okay.
Yep.
So when I click on run scan, it gives it, these are the ones, gives me 11 of them.
Okay.
So now I have 11 stocks that I can go do research on. You can see Cigna, Molina Healthcare, Humana, some of the United Healthcare is a great one.
I think UHG reported last week.
Could be. Yeah. We'll look at the chart on that. Quest Diagnostics. But these I've ranked by scooter score. So Cano Health is in the top 99%.
Never even heard of it.
You're right. Exactly. But then I take it one step further because I have a number of different subscriptions, and most people aren't going to have, the access to the platforms that I use. Yeah. And if you were to choose one, I would probably start with, as a beginner, I would start with VectorVest. Okay. Is a really great one to learn about the market, and the structure of it, the way they do things, they will keep you on the right side if you follow their process. You just follow the color guard. I put that in my newsletter every week. Yep. So that's where I would start, but I'm using both of them. So Stock Charts is great for charting, for technical analysis, whereas VectorVest is better for fundamental analysis.
Yeah. That makes
All right.
sense.
So what I then do is I download the CSV of what I got out of Stock Charts. And it gives me these. I take out everything except for the symbols. So I'll delete everything except for the symbols. And then I'll save that to a folder, symbol downloads from Stock Charts in sector scans. Yeah. Right. Easy. So these are now healthcare providers. And I usually put a date on it. So 10/16/22. All right, so now I've got that saved there. And then I can go over to VectorVest. Right here. These are sector scans here. I'm going to empty that watch list and I'm going to repopulate it with the ones that I just did.
Oh, I got you. Okay.
All right. So now I go over here to, here's healthcare providers, the one that I just created. And this will bring all of those symbols right into VectorVest. And VectorVest then ranks them by the strength, the fundamental strength of the company. All right. So VST is something that kind of combines all of the different metrics together and gives it a score. So you can see Molina is the strongest one based on that. Gotcha. But I can also sort these by relative strength for value versus price. So which ones are undervalued? Value versus price. And now I can see Elevance is the one that's most undervalued. And Molina is right below it. And there's Cano Health. I can also do it by VST. So VST is this one. RT is relative timing. That's the acceleration of its momentum. And growth, which one is growing the fastest. I can combine all three of those together. So which one is the strongest of those? And I can see that's DocGeo, which I've never heard of either. Me neither. DocGeo. I can do it by the safety of the company. And DocGeo is up there too. So this allows me then to see which ones get gravitated to the top. Those might be the better ones to start to look at. But then I can also graph all of these and I can look at them on a graph. So here's DCGO. Friday it declined. This is rolling over, but the one at the bottom is the earnings. So this is a way that I can see how their earnings have been over the last 3 months or 1 year or whatever. All right. So you see down here, the earnings have been accelerating. That's what I want to see. I want to see this 40-day moving average line moving up. And that's how I determine which ones are good candidates to put on my watch list. So here's Option Care, also declined on Friday, but the earnings are going down. See the red line?
Yep.
Declining. So that's probably one I don't want to look at. Here's United Healthcare. Look at that earnings line. Just from lower left to upper right, nice smooth line. That's beautiful. The other thing about this that I noticed is this is the momentum, this one here. The momentum is just starting to come back up, starting to accelerate again. And they did just have earnings on the 14th.
Yep.
I don't know what they were, but it looks like they were okay.
We're okay.
Yeah, it started going up. So here's Elevance, another one that came up at the top. Look at those earnings down below. So that's a good candidate. Molina, look at those earnings. Just nice, smooth line, 45-degree angle. Molina, by the way, is looks like a pretty good HMO. Humana, another HMO, earnings look very similar. So this is the most important thing that I want to see. I want to see earnings accelerating consistently, going up. And then the one up here kind of tells me when I should think about getting in based on the momentum. And then I've got moving average lines up here that help me see it. So this is the 200-day that I've talked about before. I always want something that's above the 200-day moving average, the gray one, right? Here's Acadia Health. Nice earnings on that one too. The momentum isn't quite there yet. So this is one I might want to wait for to see it start to move up. Cigna Healthcare, look at those earnings. All of these, the earnings look really good, except for that one, except for one of them. Here's Ensign Group, nursing homes. I don't like the chart. I don't like the look of the chart with the moving average lines moving down below each other. You know, they're all down below the 50-day now. So I don't like that part of it. And it's just looks like it's coming back down to its 200-day. But earnings look really good. This is Cano Health, the one that we hadn't heard about. Earnings don't look that great.
No, I would say not.
Right? And momentum is rolling over. So even though that was on the list, and in one of those scans, it was actually at the top of the list or near the top, it's probably not one I would want to look at right now. And then Quest Diagnostics, again, earnings trending down.
Cool.
So United Healthcare is probably one of the best ones on here. Cigna is a good one. So anyway, that's the process that I go through.
That's awesome.
To try to find, you know, I like using both of those together. In fact, if we go back to, here to stock charts, I can now save these and I can look at the charts on each one of these. Now, this doesn't tell me the earnings for it. It just shows me what the chart looks like. But now I can chart each of these and look through them each one at a time. So there's Acadia Health. You know, it's dropping below all of its moving average lines. There's Cano, again, dropping below. It's right down to the 21, which is usually reversion to the mean. Cigna looks pretty good. DocGeo doesn't look too shabby either. Came down on Friday, but it's staying above its moving averages. And the accumulation distribution looks good down here too. Quest Diagnostics. So the key thing here, this is below the 50-day and the 200-day. So that's not one that I would consider either. Elevance, probably not. Ensign, probably not. Humana might be a candidate. Molina Health might be a candidate. Option Care, probably not. United Healthcare. Now, United Healthcare is below its 50-day moving average, and it gapped up on Friday, but then it started selling back down again. So it came right back down to its 21-day or reversion to the mean. So this is one to keep an eye on because next week is options expiration. And options expiration, weird things happen in the market.
Yeah.
It's opposite week. So things that have had nice run-ups like energy might get a sell-off. Things that have been selling like technology might start getting a rally. And then the week after that is the worst week of the year. historically
Mhm.
of the whole year.
Oh, wow.
And then the week right after that, starting on the 28th, is the best week. That starts the best period of the year.
That's
So you go
weird. It goes from the worst to the best.
You go from the worst week to the best week.
That's interesting.
But I mean, if you believe the market's going to start going higher, and it's hard to do that, it's hard to believe that with the way the market's hit 3,500 and it's had so much selling, even with that nice rally on Thursday. Like I've said before, and I actually put in my newsletter again, the best time to buy stocks is when you won't want to. And John Templeton said the time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell.
Agreed.
So keep that in mind. Let me show my newsletter one more time.
Yes, sir.
Close it out.
Yep.
So if anyone's interested, just send me an email to breakpointtrading@gmail.com. And I'll add you to my list. I'll send you this week's newsletter. And if you ever want to get off, just let me know. I'll take you off.
And thank you very much for doing this. I appreciate it. The audience appreciates it. It's going to be a fun week. We'll talk next weekend.
All right. Have a good one. Take care.
Bye. Bye.